All right, welcome back to another episode of The Aspiring VC. Your host, Matt Snow with Mass Ventures here. I have the pleasure of talking to Mikal Khoso at Wavemaker today. But before we get into anything venture capital, let's talk about coffee, Dunkin' or Starbucks. What's your pick?
I'm a Starbucks guy, but to be honest, I went to college in Boston, and Dunkin' is kind of like a religion there. So I've spent a lot of time in Dunkin' Donuts with people.
Yeah, Dunkin's the way out here. I've got my cup right here, as always. But definitely understand the people that are Starbucks junkies. Um, let's go into just your background real quick. 2-minute summary. Who are you? What's the firm, and what's the role that you're in there right now?
Yeah, so it's kind of a long story, but I'll try to compress it into 2 minutes. I grew up overseas in Africa and the Middle East, came to the US for university, and went to Northeastern in Boston. Quickly got sucked into the tech scene and onto the investing side, and have been there ever since. I got to know the Wavemaker folks through a mutual connection, and I'm an investor on the team, and I'm an associate. And I invest across the US and do a little bit on our sort of Southeast Asia team as well. As a firm, we're cross-border, office in LA, office in Singapore, investing across 15 countries across North America and the US. Been around for 17 years, and we've made 300 investments in that time.
Wow, that is amazing. Size and spread of portfolio and the global exposure. When you really got interested in kind of the strategy at Wavemaker and seeing what they were doing, what else kind of pulled you to the unique aspects of the firm?
Well, the fact that they were in LA was important to me. I had sort of set my sights on LA before I graduated from university, and somebody had put it on my radar, a friend of mine, and I started looking in, and there was a lot to like about what was going on. And this was sort of 2017, 2018. There were a few big companies like Snapchat, SpaceX, and so on that had established their name, but there was a lot of activity at the seed stage, and the city is very large with a very large economy. And I just thought that it was going to be a next hub, a major hub. And I decided I wanted to take the leap and start my career there and sort of ride that elevator to the top, hopefully. So the fact that Wavemaker had been in LA for a long time was really appealing to me. And the international side was very appealing to me. I think, we do our offsite in Singapore as a team. We invest across all these markets. It gives us a unique perspective on innovation, I think, on both sides.
And I think it'd be cool to talk about kind of you have basically a global background, global outlook, and that's not something that probably is too common in venture, right? Probably a lot of people that do venture in the kind of country they've always been in, and so how does that kind of impact the way you view companies and markets and the industry as a whole?
Yeah, it's an interesting thing because I think now activity in emerging markets is picking up very rapidly, and you're seeing that across all regions essentially. Southeast Asia was the first, I think, and that's where we first established a presence about 10 years ago. But now Latin America and Africa, Eastern Europe, South Asia, everything is heating up, which is great. Um, I think the way I think about things is the US and the West has been a sort of a pioneer for a lot of technologies and business models historically. But now through globalization, those technologies have, you know, moved across the world. And I actually think now, and this is a thesis I have, that the rate of innovation in emerging markets is exceeding that in the West in many cases. And, people used to model themselves after big companies in the West. If you look at the first few generations of Chinese entrepreneurship, everything was a copycat of some US company. But I think it's going in reverse now. If you look at Meituan, for example, Meituan is the pioneer of the food delivery category. And DoorDash and Deliveroo and Getir, all these companies around the world are following the playbook that they established. And I think you're seeing that with payments, you're seeing that with mobile banking and all these markets, that things are sort of the causality is moving into reverse. And companies in the West increasingly are copying and taking inspiration from these companies. And that's a really interesting trend as a firm we've been tracking. I think B2B e-commerce is one area in Southeast Asia, which has taken off immensely, these marketplaces. The US is still super early. There hasn't been as much digitization of B2B e-commerce, but it's starting now. And so we look at the models that we've invested in, 4 companies across Asia that do that. And we use that as a guiding point as we look at companies in the US.
Yeah, it's a really interesting point. I mean, I think in some areas, like in some areas of deep technology, I would say that we're still probably leading, right? Maybe with bio and maybe kind of advanced energy. Not to say that there isn't, fabulous development coming out of that internationally, but in these areas where the West or kind of the US specifically is kind of not being first to market. Is there a way that that can be fixed, or do you think it's a dynamic about kind of the way that the culture in the country has like evolved into like its current, status? Like, do you think there's just kind of a bias towards the way things are maybe that holds back some of these technologies?
I think, what's worked extremely well in the US in particular is the government has a great industrial policy when it comes to technology and is very generous with funding deep tech at the university level and then commercializing it. There are a lot of SBIR grants available, NSF grants. We don't interact with this, but there's a lot of money flowing around that finances that primary innovation. In emerging markets, you don't have those innovation systems built yet, right? You don't have the National Science Foundation and the resources they have in the US. You don't have DARPA and the DoD systems. Those are coming, and that's why you have such advanced, space and manufacturing and biotech technology in the West. But in areas where the capital intensity of the technology is not as high, mobile banking, mobile gaming, things like that, e-commerce, you're seeing adoption in these emerging markets soar. One, because I think the cost of acquisition is so low for a variety of reasons, right? There are fewer competitors and it's just cheaper to advertise in these markets. And that facilitates tremendous scale. Some of these companies are gigantic. A lot of people have never heard of them in the West. Like Tokopedia is one of my favorite examples. Last year, their GMV was equivalent to 1.5% of Indonesia's GDP, which is insane when you think about it, right? Just ridiculous scale. And so that scale facilitates innovation and very rapid innovation in e-commerce, in delivery, in mobile banking. And what you have now in the West is you have legacy systems, right? And they jump straight to mobile banking in most of these emerging markets and mobile payments. The credit card networks and infrastructure didn't really take off. In the West, that's been the predominant model now for decades. And is mobile banking 10 times better than a credit card? I'm skeptical about that, to be honest. And that's why we haven't seen the adoption in that area and the innovation take off. So that's the kind of the way we think about things, is where they're not legacy systems, you can try the latest thing in these emerging markets.
And it does seem like all at once in a bunch of sectors, the time of technology adoption is compressing and the cycles are going faster, right? So maybe technologies that we thought were going to take 10 years to go to market are going to take 3, and that's all very positive. But it does seem like you said, there's a lot of folks, kind of really institutionalizing that Southeast Asia VC kind of ecosystem, but maybe in certain markets that would deserve that structure, the forces of capital haven't kind of converged there yet. What do you think can be done? Say there's an ecosystem you really like, maybe like Brazil or something, and how could that kind of geo really accelerate this institutional capital building stack?
Yeah, so I'm actually half Pakistani, and I've been sort of tasked with looking at South Asia for the firm, along with a colleague. And we made our first investment in Pakistan this year, a company called Bazaar, a B2B e-commerce marketplace. And Pakistan is still like a no-go zone for a lot of people, right? They've seen some bad headlines, they're not willing to touch it, but that's where Southeast Asia was 10, 11 years ago when we set up our office there. People were like Philippines, Indonesia, no way, right? And now it's obvious and everyone's excited. So I think that's part of it, is you have to, as a firm, if you're looking for alpha, you have to go where other people are too scared to fish, and you have to be very disciplined and thoughtful about that. If you look at Pakistan now, there's a lot of activity. You need the fundamentals, right? It's a big country, 220 million people, middle income country, and every month they add 1 million smartphone users, right? So it's a fertile ground for technology. And it requires, one, the government in Pakistan is doing a lot of shifts. They're enabling foreign capital to come in and out much easier. And they just allowed companies to have a foreign headquarters, basically, to incorporate in Singapore, but have their operations and subsidiary in Pakistan, which is very important for investors, right? You get, Singapore is the Delaware of the East, right? It's a great legal and financial system, and investors get comfortable when you're headquartered there. So I think that's important. And then it takes an innovation system, right? I touched on that earlier for deep tech, even for tech that is not as difficult or cutting edge. You still need the accelerators. You still need the early angel financing. You need some established companies to be guideposts and inspiration for companies. And it only takes a few examples, I think, before the engine starts turning. Because for every exit that happens, you create a lot of wealthy people, hopefully, and that money gets pumped back into the system. Tech is a very forward-looking and self-generating system. So if you're looking, Nigeria is another example which is really picking up. I think these are the sort of pioneers, but every emerging market is only a few years behind a lot of these places.
And like this is super fascinating. So I have some questions that I keep thinking about this now. Like, when you look at Pakistan specifically, I imagine there's probably like this family office community that could kind of spearhead the development of the first venture funds or accelerators, and kind of obviously, I imagine they're helping on these. They probably know of all these funding rounds of the really well established and connected family offices there. Do you think that is true about the role they can have in spearheading the innovation ecosystem?
It's possible, but typically family offices, are less educated on venture just globally and very risk averse, right? It's a certain way of investing, and capital protection is very important, right? So they can play a role, especially as the younger generation takes over a lot of these family offices, and we're seeing the interest in technology just from a sort of experience perspective, right? But what I think again is very powerful is the government. So the reason we went to Singapore partially is that the government was willing to anchor our first fund because they wanted to facilitate a technology ecosystem in the city. And they used a matching program. So for every $1 we would put in, they would match that investment with $5.1 of investment, right? And that facilitates a lot of capital into these early companies, and then the flywheel starts to go. And that matching program was inspired by Israel, which has done a great job of creating a technology ecosystem. That model is not magic. It's not unique. It's not protected by IP. Every country can employ a matching program to facilitate activity in their markets, to bring entrepreneurs and give them the margin of safety and the room to innovate. And at a certain point, if it's not working, you can sort of pull the plug. If it is working, then you have a rocket ship, and by Series A or Series B, when there are 10 million customers, it's very easy for any big venture capital firm anywhere to come in and write the round. For example, Bikea is like a motorcycle delivery and ride sharing platform in Pakistan. They just raised their Series B from Nasper's first investment in Pakistan. But by the time they've reached that point, they're at tremendous scale. So for Nasper's, it's been de-risked in many ways.
With all the kind of overlapping, you have CVCs and conglomerates from certain countries investing in other countries and getting exposure there. Do you see a potential for, with this venture decentralized playbook and the government assistance playbook being opened and brought to the, all corners of the globe? Do you see that as a good potential to kind of reduce conflict across the world, as everyone has exposure in everyone's companies, and we all need each other's countries to be thriving, economies?
Yeah, I think that's the thesis right behind globalization is if we economically tie each together at the hip, it's going to be a lot more painful for us to punch each other in the face, right? Um, and in some ways, globalization is retreating, and that's a different subject. But I think we're at the beginning of some of these regions tying together economically in a much deeper way. So I grew up in East Africa, and the East African area is slowly marching its way into becoming some kind of economic union. And so by lowering transaction costs between countries, facilitating trade, you can create a larger block, which obviously for entrepreneurs is great, right? A bigger market, more spending power. And so you're less likely to see Ethiopia invade Kenya or Kenya invade Uganda when there's a lot of trade and transactions happening, because it's a lose-lose. So that is the hope. But there's still lots and lots of barriers to doing business across borders. Payments, for example, is still such a fiendishly complex business. That's why there's so many massive and valuable startups going after it. But it's still very difficult to move money across borders.
Yeah, so I guess maybe when we see the friction of global money reduced to the friction of global info transfer that we already have on the internet, maybe that would be the floodgate moment that tips this into overdrive, and we just, right? I guess that's the bull case. That's the bull case on humanity, right? Is this globalization and tech curve just takes off everywhere at all at once, and we all kind of overlap exposure in each other's companies and countries, and we just find it better to build products than to build bombs, right?
Yeah, absolutely. And I just think it's the smartphone is just still so early in its evolution and impact on society. The fact that it's, only 13 years old pretty much is incredible. But the fact that, hundreds of millions of people every few years are getting access to a smartphone, and all the information and all the capacity that entails is incredible. And, it's the start of all this kind of innovation, gaming, mobile banking, commerce, and you have a world of billions of people that don't have the same economic opportunities that, say, the wealthiest countries have. But that's starting to change, I hope. And I think it's exciting. Emerging markets are super exciting, and there's not enough investment going into them.
Absolutely. And now I think I kind of have a great sense of, how that brought you into your current role and the importance for you of being able to be behind and backing these companies in the beginning of the curve. You know, the focus of this podcast for a lot of listeners is early young professionals or college students that really want to break into this venture industry. And when you look at, there's no single straight path, but like all the things that brought you into this role, and you got into dorm room fun before, how did you do this? How did you make it work?
It was a process, right, and a lot of work. So I will tell everyone who wants to break into venture, it's not easy, and you really have to put your mind to it. Um, and for any undergrads, you're competing against a lot of talented MBAs that are also trying to break into venture. So the first thing to do is figure out how you can set yourself apart, and there are a lot of different ways to do that. I think organizations like Dormer Fund, which I was part of, which is a student-run venture firm in college. There's also Rough Draft, Contrary Capital. There are a few others. It's a great way to get exposure and get sort of training wheels for venture. Internships at venture capital firms as well. So I interned at Underscore VC in Boston for 6 months as well, which was super helpful. But a lot of people say it's a relationship business, and it is. The only way to get in is to know people, for better or for worse. And so the first thing to do is plug yourself into the network and ecosystem. There are a lot of tech events, and that's a great place to start. A lot of them are open to the public, a lot of them are free. And then you can start to plug yourself into the network and system. You'll meet people who work at companies, you'll meet people who are founders of companies, you'll meet the occasional VC. And as you start to form that network, you can tap everyone else's network, right? Everyone who's in the tech ecosystem knows a few VCs. And that's a great way to start, is to get to know a few VCs, get into the flow. And I think the best way to get a VC's attention is, one, to build a relationship. But I tell the story a lot when I speak to undergrads, have a coffee with them. They ask me, all day for VCs, people are asking you for something. It's ask, asking you for money, asking you for help on this, asking you for a intro for a hire. If you can come at an event and offer something, right, offer a give instead of an ask, you're going to get their attention. And there are a lot of ways to do that. One is an introduction to a company they haven't talked to, right? If you're speaking with companies and you can offer that intro, that's a great way to start to build a relationship. Another give is knowledge, right? Offer some expertise, offer a link to an article. Another is, maybe you have friends or family who work at companies that might be good customers for some of their companies. It's a bit harder, obviously. So coming in with a give is always a great way to build a relationship. And it's a very relationship driven business. So people are always, chatting, getting to know each other, helping each other out. And so that's where to start. I mean, in terms of actually getting a role, there's a lot of work that goes into that.
And, how did you go about networking in the way of like, it's tough at the beginning stages to convince people to want to talk with you. And so I guess it was kind of what you're saying, bringing companies and bringing market theses. And how did you think about doing some of that stuff without being overbearing? I find that to be in the beginning stages, one of the hardest things, right? It's like, I don't want to annoy everyone, but I want to be putting value out so they'll want to say, yeah, I'll talk to you.
Yeah, I still struggle with that, to be honest. Even asking people for things, I still struggle with that, for better or for worse. I think you have to back yourself. I've always believed that irrational self-confidence has the highest expected value. If you don't think you can do it, then you won't do it, right? So you have to be irrational about it because it's very competitive, and you have to just start doing it. So, writing is a great way to start to build a brand, and on Twitter, and engage with people. A lot of people say, I don't know if I have anything interesting to say or if people care. Doesn't matter. Just start writing, and you'll be surprised. The internet's a big place. A lot of people will find what you're saying is interesting, and there are unlimited places to publish that. In terms of going to events, a lot of people just go to events just to have fun. There might be a speech or a talk, but they go there to network and meet people. So you can start to build relationships there. And I would encourage people to play the student card. You'd be surprised how much people want to help students, especially in a time like this. So you can say, look, I'm just a student. I actually did this. I went to an event and there was a partner there. I hope he doesn't mind me mentioning him. I went to an event. It was a funny event. It was like Beef and Blockchain or something. It was a funny name. And I met a VC in Boston, which I really looked up to there, Mike Troiano at G20 Partners. And I just met him. I just went to say hi. I said, Mike, I'm a student. I'm a admirer of your work. I've been following your blog posts. Just wanted to say hi. And we got to talking and talked about a couple different things, a couple different trends. And then he said, here's my card. Let's grab coffee sometime. We'd love to keep the conversation going. And I've continued to build that relationship over time. Whenever I'm in Boston, I go to see him. We have a coffee. We chat. I send him companies that I think would be a fit for him, and that's how it works, right? It was very spontaneous, getting to know him, having a good conversation, and then that turning into a relationship, which I've invested over time. And he's been super helpful in helping me think about things as well.
And how do you balance, maintaining the relationships you have and providing value, keeping those kind of like warm leads, but also like constantly building the new ones as well?
Yeah, it's a trade-off, right? I think depth is very, very important in relationships in general, but in particular in venture. And so I think there are 5 to 7 people, fellow investors, all of them, young investors on the way up, let's say, that I work most closely with and collaborate most closely with. And that's probably because we just get along, or we're looking at very similar things and have very similar views on the world. And those relationships take time to crystallize. And the first step is you just got to meet as many people as possible. That's job number one when you're an analyst or associate. Everyone says just go out there and meet everyone. Just know everyone, be the most social butterfly in the world. So that's step one, is just having intro calls with everyone. And it's easy. We're talking now, Matt. You might be interested in meeting people in LA. You'll say, look, I'd love to meet three to five of your favorite people in LA. And I say, okay, and I'll ping them, line up the intros, and there you go. That's how it goes, right? So it's easy to meet those people. From there, you have to decide how you want to spend your time. I know some people who just know 100 people and keep up with them all the time, and I just can't do that. I prefer to work sort of with my core, the people I work most actively with, and there we're working together, sharing deals, we'll diligence companies together sometimes, catching up, and a lot of the time it's just having a drink or having coffee with them and talking about different things, like what's happening in this market, or what do you think about that, or this exit just happened. It's all a process of calibration and continuing the learning as an investor.
And I think, is it Dunbar's equation, right? That like general psychology thesis that like 100 people or 500 people, right, is kind of like the max that humans were built for. And I guess it seems like you find that to be kind of true just naturally with how things work after you meet a lot of people, right?
Yeah, I think it's 150 for Dunbar's number, but social media has given us the impression that we can know thousands or millions of people, or even hundreds, in a very personal capacity. I mean, I know lots of people personally, but I haven't spoken with a lot of them in a long time, right? I went to high school with 60 people and I remember all of their names, but I haven't spoken to most of them in ages. I can give them a call and say I know them, but it's not the same as being very involved day to day in someone's life. And venture is a very fast moving business. So, the people you work most closely with are sort of your core, and they're helping you stay on the pulse, and you're working together. And it's very spontaneous. Opportunities can come from any angle.
And this might be an obvious one. I can tell that you're social, you like networking, you think a lot about markets. But what are the other things that pulled you into this venture world, and what keeps you excited and staying enthusiastic here?
Yeah. So I'm kind of odd. I've wanted to be a VC since I was like 14, which I don't think a lot of people say. I used to read a lot, and I was an active reader of The Economist, and I've always loved trends and technology and how they intersect with economics and politics. And once I was reading The Economist, I came across this role of venture capital, and I started seeing it a few times. I started looking into it, and I was like, this is probably the perfect thing if you're interested in trends and technologies. And it very much has been. And the reasons I like the role are, one, the pace of learning is just tremendous, right? If you're someone who loves to learn about random things, it's a great job for that. And you get to know a lot about a lot of different things, and it keeps you stimulated. Markets are always changing. The economic environment is changing. Competition in the market is changing. Sizing all that up is very intellectually stimulating for me, and I love it. And you get to meet a lot of people. It's a great business, especially when you're young, to broaden your network. You get access to people you wouldn't otherwise have access to. I've spoken to CEOs of companies that are pretty impressive, and name brand companies that say it, which I would never have access to if I was doing something else. Which is also a privilege, and something that as a young person I think has a lot of value because you can take your career in any direction. You can be an investor your whole career, or you can become an operator. But that foundation of that network you build and the skill of building that network stays with you for life.
That brings me to like an interesting thought is like, what do you think you'd be doing if you weren't in venture?
Oof, I have no idea, to be honest. I don't think about it too much. You have so much to think about in the role, but I've operated before, worked at two or three different companies. I think I'd probably be working at a startup or be an entrepreneur myself. That being said, hedge funds are pretty interesting to me, to be honest. I really admire the discipline a lot of them have and the data that they have. Very different from early stage venture, where there's a lot less information and a lot more gut feeling and qualitative analysis. The discipline that some of these hedge funds have and the analysis they do, I really appreciate, and I read a lot of their stuff just to learn. And I read a lot of public analyst reports on companies just to learn. And those people are investors just like us. They're investing in a slightly different asset class at a slightly different stage. But technology is a horizontal now. It's not a vertical. So a lot of these public companies are thinking and breathing technology every day now. And so it affects my role as well. So maybe I'd be a public stock analyst at an investment bank or working at a hedge fund.
Yeah, it's interesting. And it brings me to a thought. Someone told me this once that like venture is the only asset class where the security selects the investor. Everywhere else, the investor selects a security basically whenever they want, right? Buying and selling liquidity wise. And I feel like for people trying to break into the industry, there's small things like that, and like raising from LPs that are like still very opaque, and if not opaque, just hard to grasp unless you're doing this full time. Like, how do you think about breaking down some of those more intangible ideas about the industry to like people that want to break in?
Yeah, it's a great point. And I think fortunately, just from a timing perspective, when I broke into the industry, it's very different than it was 10, 20 years ago because there's so much more information online now. And a lot of great blog posts from a lot of great VCs that have taught me a lot about everything from returns management, recycling, building an LP network, winning a deal. And I very much feel like I'm standing on the shoulders of giants. Like all this expertise and experience I have, a lot of it's not mine. It was accumulated by someone else and then condensed into a blog post or two. And that's something I've picked up on, read, and started to apply, right? And that wouldn't have been possible 10 or 20 years ago. So that's where I encourage everyone to start is just read what's out there. I have a reading list that I share with people. It's on Medium, just of everything that helped me learn something in venture. Every time I read a blog post, that makes me go, oh, wow, I put it there. That's a great place to start because then you can talk about the industry in a sophisticated way when you meet a VC or when you meet someone involved. And that's a great way to impress people, but it also guides how you think about a prospective role. In terms of LP management and raising, that's super opaque for a variety of reasons. I don't think that's going to change, but that's a bridge you cross once you get a little bit of experience on someone else's dime.
And like what you were talking about earlier, I guess, like you said, the smartphone, 13 years, the internet adoption still coming, some of these emerging markets. But now that the podcasting in particular and the blogging is really exploding, I guess that is helping to, like you said, it's taking these lessons of decades of wisdom and condensing it down into nuggets and then giving it to everyone for free, basically. And interesting to think about how that's going to kind of accelerate these ecosystems like we were talking about earlier. And it's crazy to think, even if you just look at basically this industry started in the late 70s, early 80s, and look how different the world is in 40 years. Like, where are we going to be in 2040? I mean, that's just a crazy thought at this point.
Yeah, I saw this great tweet the other day, basically saying that venture capital is undergoing a massive experimentation or experiment in scaling. It's gone from exits being under a billion and markets being under a billion to 10, 20, $60 billion companies exiting every week these days, and massive enterprise software markets now that nobody would have imagined are this big, and then the globalization of tech markets across the world. So there's a massive scaling up process that's happening. A lot of people complain when they're young investors that the path is not very clear, how you move up, how you get promoted, how you learn. And I think that's a feature of how young the industry is and how small it has been historically relative to private equity. If you look at private equity in the 80s and 90s, it went through a professionalization period where they established, these roles, analyst, associate, principal, 2 years, 2 years, 2 years. They established the salary brackets and the expectations. They professionalize the operations of a firm. I think venture capital is going through the same thing right now over the last 5 years and going into the next 10, where the industry is professionalizing, figuring out how to hire talent, how to train talent, how to promote them, and how to grow and maintain firms over time. That's not been something that has been at the forefront for anyone historically.
It's also cool too with like this rolling fund stuff and this innovation on how to launch the fund model. And then I think tomorrow, right, the Reg CF and the Reg A plus are like going way up. And I feel like that's flown under the radar for some VCs, not realizing how substantial that may be for like actually competitive companies that could raise from them too. And yeah, I guess it's like innovating at all sides, right?
Yeah, totally. I mean, we dally, or do a little bit of this at Wavemaker. We have a division called Wavemaker Labs where we build robotic process automation companies from the ground up. We have a team of like 20 engineers, and we do crowdfunding for those companies. We found it to be quite successful. We can raise 3, 5, $10 million through crowdfunding in a variety of robotics sort of automation concepts. So it definitely works. There are obviously limitations on how much you can raise and how you can do it, but it's innovation that's continuing. And I actually believe this is I don't think we would go here, but it's an interesting thing to think about. I think that the private markets are going to look a lot more like the public markets in 5 to 10 years, because I think liquidity in the secondary market is going to pick up, right? You have Carta X, you have these platforms that are making it easier to trade private securities. There are a lot more participants in the markets, and there's a lot more data now available just generally on these markets, the size of them, the behavior of customers, that kind of thing. So I think the line between public and private is blurring. You're seeing these hedge funds investing in private rounds, these growth shops that only do later stage investing, going earlier and earlier. So it's blurring, and I think as investors we have to adapt.
Totally. And I think you've seen a lot of like hedge funds convert into family offices as the hedge fund returns got killed, and then naturally start going into, venture fund commits and then doing some co-invest. And so it's almost like they have to because the returns just aren't there, frankly.
Yeah, well, I think personally that investing is a skill, right? And I think investing across asset classes, it's about specialization. You specialize in a strategy and maybe an asset class, but investing overall is a skill. And irrespective of what asset class you're doing, there's a way to go about it, and there's a way to do it effectively, depending on what you're investing in. So I think that's part of why the line is blurring, is because public investors who had no idea how to do private investing before probably have read some of the blog posts that I've been reading and talked to a lot of the investors involved, and so they've picked up a bit of that experience and expertise and muscle. And the same on the private side. There are venture firms with SPACs now that are taking companies public. They are starting to learn that muscle as well. How do we invest, into the public markets? Andreessen, for example, is a registered investment advisor now, a transition they made a while ago. So, I think investing as a skill allows you to move across asset classes. Doesn't mean you can do it effectively, right? That's down to your process and execution.
And I just have to, with everything we've just brought up, I like have to bring this up. It's top of mind right now. Is this the Coinbase S1, right? And it's sitting at this intersection of our combo of public and private markets and family offices and hedge funds and globalization. And so I believe I heard someone today say it's the biggest IPO of the past century at the 100, if it hits that 100 billion mark. And I think is Andreessen or Sequoia, one of them, their stake in Coinbase is worth the same amount of the current AUM of the firm. So not only is it a
Wow.
fund returner, it's a firm returner, literally 2x your AUM on one company. Yeah, I mean, going from 0 to 100 billion in a decade, I'm just unbelievable. And obviously it touches on, Coinbase with, Bitcoin and Ethereum and everything else, with the potential to have, we might find that global currency with the zero friction that could just absolutely tear, economic growth and send it just shooting up if we remove all the friction of global currency. I was just curious about, what you think about everything that's going on around it.
Yeah, I mean, there have been some insane exits last year, right? And Coinbase may be the flagship of that for a variety of reasons. But, we haven't touched on it yet, but the industry is a power law distribution, right? The biggest exits are massive, and then, everything else is small in comparison. And that's really hard just mentally as an investor to wrap your head around. Even day to day, I have to catch myself. I'm saying this company looks great, but Can every company be $100 billion company? No, you need very specific factors, right? So with Andreessen, right, people have wondered about a lot of the investments they've made, but it doesn't matter because this one investment has made the firm, made the funds, whatever you want to say, and that's what it takes, right? It's an outlier business. Um, I just think that it's a little easier potentially to find those outliers in emerging markets than in the West because the competition is lower and these markets are, huge. They're just massive. Like, you know, Indonesia has 260 million people. It's almost as many people as the US, but most people probably don't know that, right? And these countries are growing fast. So I'm hoping we'll see a lot more Coinbases coming out of all parts of the world. Maybe not specifically in crypto, but in everything. And we're starting to see that. I mean, C is a massive $111 billion company that does e-commerce and gaming in Southeast Asia. Tokopedia and Gojek are apparently going to merge and go public. Grab is probably going to go public. These are all companies in Southeast Asia that are all going to be over $10 billion in the public markets, and many more to come. So we're just at the beginning of huge exits all over the world.
Yeah, and Nick Nash now has closed the first fund for Asia Partners, which builds that growth equity layer for the Southeast Asian ecosystem, kind of filling any the gaps that family offices won't fill. And you already have a lot of amazing funds there. So that ecosystem's like built, like done, like going up. And it's just like we were talking about earlier. Let's, hopefully kind of some people, whether they're listening to this or not, hopefully people can start to replicate that in all these other regions, because it could just, the benefits that globally will accrue from building up these technology ecosystems are potentially we can't even comprehend, right? Because we don't think exponentially. Like the people that really want to break into VC, it's and even the people that are in VC, like you have to work against this human brain that wants to think linearly, right? And it just doesn't want to comprehend exponentials.
Totally. And I think the best example is imagine if the pandemic happened 10 or 20 years ago, right? Probably 20 years ago, before we had smartphones, before Shopify existed, before Zoom existed, right? Before all these enabling technologies like DoorDash and all these other things were in place. I think it would have been a lot harder to adapt for businesses and for people. But we've been able to make the best of it because Zoom has been around and Shopify has been around and DoorDash and so many other companies around the world that have facilitated a transition to this new environment and are facilitating a transition back now. And I'm very optimistic about the next decade, in part because of the dramatic acceleration we've seen last year with technology across the entire world.
Yeah, I guess we just took the world 5 years into the future on all these trends, right? And it just forced it, and now we're about to see. I guess we've seen a lot of bad things, but I think hopefully we'll be kind of pleasantly surprised with some of the nice results that come out of this.
Yeah, totally. I mean, a lot of suffering, unfortunately, but it's just a transition point in history. I think Peter Thiel said this, and I haven't been able to stop thinking about it. He said 2020 was the first year of the 21st century, and I've just not been able to stop thinking about it because it's true. Technology has gone from a nice to have in many sectors to mission critical, and I've seen that because I spent a lot of time looking at manufacturing and logistics. The way people in these sectors and companies look at technology has gone a complete 180 from expensive and distracting to if we don't have this, we can't operate, right? We can't visit our facilities. We can't meet in person. Suddenly, people are taking technology off the shelf from every possible corner and adapting their business. And so maybe it is the first year of the 21st century.
Yeah, and I've also loved his discussion about the great stagnation, right? And how although we've seen a lot of amazing development, he thinks that too much of it was focused on IT, and we didn't have enough in energy and potentially even wishes that there was more independent critical thought going on in like areas of physics. But I think maybe this shot heard around the world moment has stopped any of that stagnation and pulled the progress back into the front.
Yeah, for sure. I mean, I'm a fan of his, and I subscribe to that stagnation view. But I think people are now appreciating that it seems to be a tipping point where that's starting to change now, because there's been very steady advancement in the deep tech, right? Cutting edge technologies we've seen for the last few decades. I think solar is a great example of that. In 1976, I think it was $220 per kilowatt hour or watt generated. Last year it was 38 cents per watt. So that's dropped in price by 99.6% over about 40 years, right? Tremendous, tremendous advancement, but it's been pretty linear, to be honest, over that period of time. So people haven't noticed it because it's moved slowly. Lithium ion batteries have dropped in price 87% over the last decade. A decade ago, they were unfeasible. Now they're starting to look pretty feasible for everything from grid storage to electric vehicles and any other use cases. And we're seeing that across all these cutting edge technologies, lab grown meat, AI and machine learning, the cloud. The work that's been put in over decades is now starting to yield fruit. And the acceleration we saw last year was a perfect combination, I think, for us to break out of the great stagnation. My favorite and most hopeful example are mRNA vaccines, which I've been looking at pretty closely. They're testing an mRNA vaccine against MS, which is an autoimmune condition which we've struggled to treat. They're testing mRNA against malaria. They're testing a vaccine. Malaria infects 200 million people every year and kills 400,000, right? It's a pandemic every year that people don't notice because it happens. It's become normal. If there's a vaccine against malaria, there'll be tremendous economic opportunity and savings unlocked. And they're testing, and probably my favorite example, mRNA against a cancer, a melanoma. They've been testing it in rats, and they found that the vaccinated rats have smaller tumors and tumors that don't spread across the body as opposed to the unvaccinated group. I mean, that could be tremendous if we can use mRNA as a platform to cure the hardest diseases that we haven't been able to so far.
Yeah, and even just from the alleviating human suffering standpoint, it's kind of unfathomable how much suffering minimization you could do in the world. I mean, that's probably the most ethical pursuit you could have as a human, other than making our kind of energy cleaner. And so that's just amazing to think about. I guess if you're ready, we can hop into some of my rapid fire questions here.
Absolutely.
So first one is, who's been one of your most important mentors? And my caveat is, if you remember a quote that they said or an action that they took that still stands in mind today.
Yeah, I think my most important mentor has been my father. I think very close to my father, and he's said something over and over for years that stuck with me, which is, you are the sum of the people around you, right? It's not a quote that's unique to him, but he's continued to emphasize it to me, and it's something that's always at the front of my mind. Is the people you spend your time with, the caliber of the people very much determine what you spend your time on and where you go in life. And so I've tried to surround myself with people that I consider high caliber throughout my sort of career, and even in school. I joined organizations that were entrepreneurial, like Dormer Fund or Scout, and I worked at firms that I looked up to, and that's been informative because the best way to learn is from people who are smarter than you at whatever you're trying to learn. And it should be a continuous process, right? And so that's stuck with me. And as I've moved around the world, he's been helpful in just guiding. How do you think about that? Where do you go next? Because I personally, I don't know where I want to settle long term. What part of the world? It's a question I don't have an answer to yet, and something we talk a lot about.
Yeah, and I think it's the perspective that you've had from all of these groups and Dorm Room and Underscore and the network that you've built along the way is probably just this massive roster of amazing potential peers and mentors to pull from. And so it's really it's awesome to hear that. Who outside of your own firm, what is either another firm or a specific GP at another fund that you really like what they're doing?
Yeah, I'm sure a lot of people pick this answer, but I really look up to Bill Gurley personally, who I think just retired from Benchmark. But I've listened to a lot of his podcasts, read a lot of his blog posts, and it's been super informative and just shaping my thinking. And he shares his insight and his thinking very openly. And obviously, he's a top tier investor, invested in Uber, massive returns, and just one of many great companies. And he's had a pretty interesting story in how he came into the industry. So I just look up to him.
Yeah, and I know he's had, or right before I think he stepped down, he had this amazing amount of thought leadership on the direct listings and the IPOs and the market structure. And obviously, I mean, just one of the greatest venture investors, but I think really interesting takes. And we're fortunate to get a lot of it direct on Twitter, as we are with all these guys.
Totally.
When you think about the characteristics of startups that get you super excited, and also if you have a couple, one or a few companies you want to mention, but really interested in this characteristics question about what do you see in a startup that makes you, understand its potential and get excited about potentially investing?
So for me, I'm a markets first investor. A lot of people at early stage are team first. For me, I look at the size of the market, and but more importantly, the structure of the market. Is it highly fragmented? Is it highly consolidated? What does that mean for how value flows in the market? And what does that mean for TAM, right? The addressable market. That's really important to me. And then from there, does the go-to-market make sense? Does it fit the market? Does it fit the structure of the market? Is it efficient? And then obviously, is this a top 3 or top 5 problem for the end customer? Because if it's not, if it's problem 27, then they don't care. They want to solve problem 1 to 26 before they solve problem 27. So it has to be a burning problem. And then the product obviously has to solve that problem, even if it's not the best way to solve that problem. And then obviously, it's a given that the team has to be great, and they have to be a team you want to work with, a team with a right to an opinion, I like to call it. They have some degree of expertise in the industry or track record that shapes their perspective on the space. And can they go the distance, right? It's very, very painful to build a company. Probably the hardest thing you can do. Can they go through the ups and the downs and the long time it takes to build something valuable?
I will say, man, that's one of the best answers I've had to this question. I love the markets focus. I feel like that's strong in the hedge fund world and not enough focus on it sometimes, especially in the early stage, right? But I do love your point too about this company building thing is brutal, and you really need to know that this person is there for the right reason. And I like that thought, right to have an opinion. Like, was that something you figured out over time, or where'd that come from?
So that's something I learned at Underscore, actually. It's something they used to say, does this person have a right to an opinion? I think Mikal, who's a partner there, is the one who came up with it. But it's a great way to think about it. Like, if I start an oncology startup tomorrow, I don't know anything about cancer. I don't have a right to an opinion, right? But if a doctor, an oncology doctor with 30 years of experience starts a startup, then maybe they have a right to an opinion about that subject. Or you have people who come from the outside and look at an industry in a very holistic way, like the founder of Uber, who didn't come from the transportation industry, but he spent like a year looking at the industry, asking questions about why it was the way it was. And that's where the insight for Uber came. And there are lots of examples of outsiders coming in with fresh eyes and looking at an industry. And I also consider that a right to an opinion.
Yeah, it's cool that you have like the very obvious, extremely high caliber experienced people, but yeah, these kind of young outsiders or people just shaking up an industry. And there probably are. Do you think it's harder to decide whether that outsider has that right to that opinion because there's not this kind of PhD or something in their background to pull upon?
For me, when I'm speaking with founders, where I spend a lot of the time is just understanding how they think, right? Why they've come to the decisions they've come to, why they've picked this go-to-market or designed the product in this way or pursuing this kind of customer. There's thinking, hopefully, behind that. And that's what I want to break down and understand, because that system, that innovation framework, is what's going to continue to guide them, through the ups and through the downs and all the challenges that come that way. That's ultimately what I'm investing in, right? Investing in a great market, hopefully that supports a great company or any great companies, investing in a real problem, and then investing in that innovation system from the founders that'll find the value and build a valuable company around it. So, that's what I spend a lot of time looking at. And even if you have, no track record in an industry, if you have a very thoughtful approach and have designed your product and found a problem that you consider to be valuable, and I can understand that reasoning, then I can get excited and say, look, they've a right to an opinion. They've obviously spent time looking at this, and this is their step-by-step sort of thinking that got them to this point.
Man, I have to be honest. I've done a lot of these podcast episodes. I've had a lot of fortune of meeting a lot of investors, and I feel like I'm speaking to a GP who's been doing this for 20 years. So, not saying that just to, for no reason. I really feel like I really like the way you think about this, the perspective that you bring. It's totally unique.
I appreciate that.
Yeah, of course, man. And the rapid fire one I want to make sure I don't forget about is, what are your favorite podcasts, books, and blogs, both venture and then just like tech and other stuff in general?
Yeah, it's, Invest Like the Best is such a great podcast. It's kind of like a continuous MBA or Masters of Investing. You just listen every week to the best investors share basically their whole thinking. So I don't think insight is really that defensible anymore. It's execution and courage. So that's super great. 20 VC is great as well, right? Probably the first one. And then I love Econ Talk personally. I studied economics in college. I love Econ Talk because he brings a broad range of guests, everything from art to hardcore economics to, these really interesting books. Like one I listened to recently, The Hidden Half, was all about how stuff that we can't quantify has an impact on end results, and just a fascinating podcast and book. So those are my top 3 podcasts.
No, that's awesome, man. Um, fun outro question here. Stole this from Tim Ferriss, but really love this. Is what is a purchase of like $100 or a couple hundred that's had an outsized impact of happiness? For context, recent answers I've heard, a lot of people said AirPods. Some people have talked about exercise equipment, but it can literally be anything.
For me, it was a couple of years ago. I bought a backpack for like $90 or 95, something like that, and that to me looked expensive, to be honest, at the time. But it was a nice backpack. It was hardy and it was big, so you could pack a lot of stuff in it. And I've used it every day basically since then. I go to work with it. I have my laptop and lunch or whatever else I'm taking. I travel with it most places. It's big enough that I can pack like a week to 10 days worth of clothes in it. I use it, to travel when I go home, and I use it when I go camping, and I use it when I go to the beach. I just basically use it everywhere, and it was a good quality backpack, right? Because it was expensive, and so it hasn't torn, it hasn't ripped, it doesn't look faded, and I look back at that and say, you know what, that was a good decision. Which, if it breaks, I have to buy another backpack of the same sort of caliber and cost.
It's funny, man. It's almost like investing in a company. You're like, I don't know about this valuation. And then it does like a 50x. You're like, oh man, this was a great one.
Yeah. What was I thinking?
Lastly, I definitely want you to promote yourself. Where can people find you on LinkedIn and Twitter and Medium and elsewhere?
Sure. I'm on Twitter, slash Mikal Khoso, my name. And then on LinkedIn, it's you can find me on LinkedIn. You can add me. I'm happy to chat to anyone if they want to reach out, student or otherwise. And if they want to learn more about emerging markets, I started a newsletter recently called Emergent, which is about the fastest growing businesses in emerging markets. So if you want to read that and sign up, it's reademergent.com. So would love to have you guys read and subscribe.
All right. Well, you have one subscriber coming immediately after this episode, so I'm excited to get that in my inbox. And yeah, I mean, this is an awesome conversation, and really appreciate your time, and excited to get this out to the listeners.
Thank you, sir. Thanks for having me.
Thanks again. We'll talk soon. Bye.
Cheers.
Looking to innovate, invent, and disrupt? We're your partner to fuel your growth. Contact us to learn more.